This video is about car insurance. Do you want to know how to make a claim for your car accident damages? How to get quick claim settlement? Do you need to hire an attorney? Okay, here we go. Who pays for car accident settlement? Well, who pays for car insurance settlement differs from state to state, and also depends on the laws of the land. Who pays for the accident settlement also depends on who is at fault for the accident or not. It is best to contact an attorney or someone well informed, otherwise you could end up messing up. Who pays for car accident settlement depends on the following situations. 1. If you are living in a no-fault state like Florida, Massachusetts, New Jersey, and others, your customer's insurance company pays out the claim without investigating if their customer was at fault for the accident or not. Such no-fault states require every driver to purchase personal injury protection (PIP). Every driver involved in a car accident files claims against this own policy. 2. There are states in the USA where the at-fault driver, himself, or the insurance company representing him pays settlements. If driver A is involved in an accident where driver B is at fault, B pays the settlement from his pockets or from his liability insurance coverage. 3. In some states, both drivers A and B pays. If driver B is 75% at fault while driver A is only 25% at fault, both pay a settlement fee that is equivalent to how much each driver is responsible for the accident. 4. There are instances where only in accidents where the driver with 100% at fault pays. If driver A is 75% at fault while driver B is only 25%, no one gets compensated. A driver is compensated only when he is 0% at fault for the car accident. 5. Drivers who purchase car insurance coverage have payments covered by their insurance companies, whereas those without insurance coverage pay directly from their pockets. Your insurance company will not pay a settlement that exceeds the limit of your insurance policy. If you purchased a liability policy of $30,000, your insurance company will only pay a figure that is either equal to or below $30,000 for an accident you caused. To avoid scenarios where your insurance coverage is insufficient to cover all damages you are at fault for, I recommend you buy full insurance coverage, or buy higher insurance limits than what is mandated in your state. What is the average time for a car accident settlement? It's not so simple task to estimate the average time for a car accident settlement because car accidents differ from each other and also insurance companies offer different terms and conditions. According to my insurance broker, the average time for car accident settlement is anywhere between 8 to 17 months, but of course, there are differences between settlements for major and minor car accidents. From my own experiences, insurance companies will delay settling your claim because 1. They want to make you lose hope and maybe give up. 2. You are playing mind games to make you accept their lower offer. 4. The company is delaying your payout just to make interest profit on your money. 5. They you to give up making additional claims. Insurance companies know cases where they cannot win in courts of law. If you need a quick settlement payout, just hire an attorney to go after them even if you intend not to go to trials. Most law firms work on contingency plans whereby you pay nothing till you win the case and received your settlement. You lose nothing by hiring a lawyer to squeeze the maximum damages from the insurance company. What is claim settlement ratio in car insurance? Not all insurance companies exhibit the same performance excellencies. It is not uncommon to find people swearing by their insurance. I have seen many people talk ill about their past insurance companies. Some of the qualities of good insurance companies include 1. Honesty. 2. Attentive customer service. 3. Community involvement and 4. Vast industry expertise and knowledge. Many people rate insurance companies based on the following factors. 1. Number of a claim processed in a certain period. 2. How fast claims are settled. 3. Ease with which claims are settled out of courts. 4. Claim settlement ratio and others. The claim settlement ratio is the number of settled claims out of the total number of files processed. For instance, if the insurance company receives 200 claim files and only 50 claims are settled, then the claim ratio equals 50 divided by 200 equals 0.25, or 25%.